Palantir, guys. This is a company that we've talked about for a long time. When it was $45 and that idiot from wherever he's from on YouTube sat there and promoted it and said it was awesome. We said avoid it. He made fun of us. Then it fell 90%. Not 90%. I think it was 85%. So it started to get interesting. It went from $45 down to like 6 or 7. Even when we did when it was at $45, what I always said was, I'm interested around 5. And that was me just throwing out numbers there. I was just kind of like, listen, at 5, and people thought, you're crazy, it's not going to happen. How fast did it happen? Well, let's look at the Palantir stock price.
It has been
look at this
quite
thing.
The ride.
It literally got to single digits May 10th of 2022, and 15 months later, because it hit a peak of 45 on January 27th. So, If you're new to the channel or you just recently subscribed and you don't know what we're doing here, we look at a lot of individual stocks. We have over 2,100 videos, and I don't know what percentage are individual stocks. My guess is 70%.
Yeah, it's probably a good number.
Because what we're trying to do is understand businesses. And when you buy a stock, you're buying a piece of a business. And we're trying to look at these companies and determine what price we want to buy them at. It's very simple. Now, Palantir got our attention. What do we love about Palantir? Well, what I love, one thing is, actually its all-time low was 584 just 2 months ago, not even 2 months ago. What I love is it's down a lot. That's a good place to start when looking for value. What companies have fallen a lot? It's got a lot of growth potential. It's got very high margin. Look at this gross margin, 78.6%.
Yeah, it's huge.
Guys, Microsoft, 68%. So this means for every dollar they bring in, they add 78.6 cents of that to essentially the bottom line. They got to pay taxes from that. But if their overhead's the same, before taxes, that's what they add to the bottom line.
That's huge.
That's
huge number.
Absolutely huge. When you have a high growth, as an example, a company like Tesla in the car business is killing it right now, and their gross margin is 25%. That's really high for a car company.
Yeah, unheard of.
Right? So this is what we're looking at here with Palantir. Now, in full disclosure, Mo and I have had a shift on Palantir again.
Yes.
This is our community here. We have someone in our community named Dalton, real smart kid, 25 years old. I don't think he's 25 yet.
He's 24.
He knows way more than I did at 24 about investing. He is a very smart kid, a good researcher. And one day he sends us a message, Mo and I a message. And he says, he does some research for us on things because I'm pretty lazy. I don't want to do research. He loves it. He said, guys, I don't like what Palantir is doing with their reporting of income. And I was like, wait, what? He said, Paul, they beat by 1 penny, which is usually an indication of something weird going on. And I'm not going to get into the full detail of it, but basically what he found was there was an investment they made that didn't appear anywhere in their reports before. And suddenly in that quarter and the quarter before, there was an investment made and they marked it up to exactly enough money that allowed them to beat earnings by 1 penny per share.
Yep.
There was no reference of it before. There was nothing about that. It was just a very weird indication. Now, that affects income, net income, not cash flow. And they've had 9 quarters in a row of free cash flow.
That's right here.
You have it right there.
Yep.
So that's great. And that free cash flow number is still very, very wonderful. And this is what we do, guys, with our software. We sit here and do the math for you. That way it makes it easier. But that's a big number right there. Yes, $73.8 million in free cash flow. Yep. Their average in the last 4 quarters, so they did 105, 160, 180, call it $180 million in the last year in free cash flow. Now, that's still not a good multiple. The company is a $16 billion company.
Correct.
And they have a lot of cash on hand and very little debt, which is a lot of positives. However, if you go by the Warren Buffett, Charlie Munger, and Howard Marks, and all these other great value investors, they'll say to you, when we see management making shady kind of actions, we like to avoid that. So I'm right now in the predicament of saying, okay, how accurate is this? Like, Dalton could be wrong, right?
Absolutely. He said it.
And we're sitting there going, okay, we have to do our own research to determine, was this markup in this investment the right thing to do? Or was it the convenient thing to do?
Right. To make things look better than they are.
To make things look better than they are. Now, the great news is it didn't affect cash flow at all.
No.
Cash flow is a much harder number to manipulate. We're going to say, Mo.
This is something that these smaller companies do to make earnings look better.
Well, you know what they also do? When your stock goes from 45
100%
down to 5, you want to make sure that you're pumping that thing up. That's what concerns me.
Exactly. You're going to do whatever you can to get the daily earnings on the earnings day. You want to see that percentage jump 15%.
Yeah, and the thing about Palantir is this is a very, very long-term play. They're growing like crazy. They have a very high gross margin, all the things you love. But if management's willing to do that, if it's accurate, and I'm not saying it's 100% true, but the fact that I even sit there and go, wait a second, and I love his research. He goes, Paul, this was never mentioned before. Suddenly it's mentioned and then it's marked up.
And there's not a lot of description about it either.
Yes, it was very vague in the 10K.
It's vague and it's just, here it is, on to the next. And it was like, what was that?
And how do you find this? By looking at the 10K.
Looking at the 10K. And guys, this is, if you're new to this channel, this is the kind of stuff that we do. We'll screen a stock, find out what price we want to pay. He said $5. Okay, when it gets to $5, then we open up the 10K. Then we start digging and saying, oh, look, that's a little weird. I'm gonna move on. You
know, it's funny, a couple years ago, we got in a YouTube battle with somebody who loved Tattooed Chef. And we've since reconciled, but he always said, do all your research up front, find out everything you know, and then determine a price. We do it the exact opposite. Then look at financials. We do it the exact opposite.
I'll tell you,
why waste your time?
Exactly. I mean, it can take an hour to 2 hours to dig through a 10K. Why would I do that on a company that I don't want to own?
Do the financials, see if it's within the ballpark. If it's in the ballpark, go do your research. If it's not, mark it as, okay, I need to wait for it to hit this level, and you'll see us. When we do our stock analyzer tool to determine the price of the stock, if it comes up all red, I'll say, add it to your watch list right here at the top, and our software will send you a text, an email, a notification, all to tell you the stock hit. Now go do your research. Why go spend your time? There are too many companies out there that could be selling for a good price. Don't go waste your time.
What do Warren and Charlie say? They can look at it and they can make a decision on a company if they're going to dig deeper within 15 seconds.
Probably. It's the same. By the way, we can too.
Numbers real quick, on to the next, and that's exactly it.
We can too.
Absolutely. We can look at something and say, within 30 seconds, I don't want to look at this.
Let me give a story here. It has to do with real estate, but it's the same idea. 10 years ago, somebody was selling me some houses in Cleveland suburb, and he had done a ton of research in 07, 08, bought the houses, and I was buying them from him for 30% less than he paid for them, right? 30% less. Yeah. So he's taking me through the houses. The first house we go to, we walk in, I'm walking in, but I literally spent maybe 90 seconds, two minutes in the house. We walk out, I go, okay, next house. He goes, wait, what, you don't want to do more? I go, no. He goes, don't you want to do more research? I go, how much research did you do buying these houses? He goes, a ton. I go, and you're selling to me now for 30% less. I like my process. And he kind of laughed, but my comment was, I got the price that I wanted. What do I care about at that point? Is the basement caving in? Are the walls caving in? If the answer is no, I'm going to do great. Mm-hmm. Now, I am lazier than most investors, I'm lazier than most thorough investors. But when it comes to 10,000 foot view, this is the average investor does, 10,000 feet. What are they doing? Is the company cool? Yes. Okay, I'm going to buy the stock.
Is the company cool? Is the stock going up? Yes.
Yes. The 1 foot view, reading the 10K, understanding everything about it. I'm probably at 100 feet. I know enough about the company from looking at the financials and asking the right questions and getting a research to find me the right answers. Because I have experience in business. Yeah. I can ask the right questions. Right. I can ask a lot of very good questions. It doesn't going to answer all the questions, but to me, I'm trying to weed out I don't want to buy a company where I have to be interviewing suppliers and ex-employees to buy them. That's not my game. I would probably make more money if I did that, but I'm okay just not beating Warren Buffett and all these other investors. I'm okay just doing my process because my process in the long run will beat the market because my emotional side of things is great. I have no problem sticking with a stock that might be down 50%. I've already seen it. Yep. Bob at one point was down 55% for me. Yep. I stuck with it. Yep. Right?
Bought more, buying more.
Exactly.
Yeah.
So this is what we do as a company. Palantir, guys, what my recommendation to you is, don't take my word for it. Go out there and do your research. But for me, I'm going to be hesitant merely because of that issue with Palantir. Mm-hmm. That's it. The free cash flow I love. The growing business I love. But in terms of the way in which they reported something, we're going to do more research. But the good news is, I'm not interested in Palantir at this price.
That's the thing. Let's let it get back to $4.50, $5. See if something changes in the next quarter, see if they elaborate on it a little bit more, and maybe the thesis changes again.
And maybe we figure out we're wrong. But good news is, it's not so low where I have to go make a decision today.
Correct.
I'm not willing to pay for a speculative play like this. I'm not willing to pay the premium it takes in order to get it.
Right.
But if it gets to $4, for example, you better believe I'm going to do a lot of research on Palantir. Because this could be a company that really grows immensely over the next 10 or 20 years.
Yes.
And I'm okay with that. So guys, Thank you very much. If you like all this software and all the things I talked about, we're running a special, $7 for 7 days, everythingmoney.com. Sign up now and subscribe to the channel. Thanks very much.